What if I told you that some of the most explosive stocks on the market right now are trading for less than the price of a cup of coffee? Yep, under $2. But here's the catch. Not all penny stocks are created equal. Some are about to double up, while others could disappear completely. In this video, I'm breaking down 6 under $2 stocks that real traders are watching closely in November 2025. The ones that could turn a small position into something serious if the catalysts play out. Stick around, because I'll also reveal a bonus play that's been quietly moving on strong volume but still flying under everyone's radar. Hey everyone, welcome back to Financial Codes, the home for penny stock lovers who crave small cap volatility and early bird opportunities before Wall Street catches on. If you live for those big green days, those market open rushes where a stock jumps 30% in the first hour, you're in the right place. Make sure to subscribe and hit that bell, because every week I'm tracking the newest, hottest, and sometimes most unpredictable under $5 and under $2 stocks in the game. And trust me, November has already been wild, with crypto heating up again, cannabis talks in Congress, and lithium back in the headlines. Penny stock traders are eating this volatility up. Before we jump into the list, let's be real for a second. Penny stocks are high risk, high reward. They're like rocket fuel for traders, powerful but dangerous if you don't handle them right. These stocks trade for cheap because they're either early in their growth story, struggling with profitability, or just out of favor with big funds. Some of them can double overnight. Others can lose half their value by the next morning. So always do your own research, never invest money you can't afford to lose, and understand this video is for informational purposes only, not financial advice. Now, let's talk about what's moving. Let's start with a name everyone's heard at least once. Tilray Brands, ticker TLRY. This one's been a wild ride for cannabis investors. A couple of years ago, Tilray was one of the hottest plays in the weed market. But as legalization talk slowed and inflation hit consumers, the stock collapsed, now trading under $2. Why are traders watching it again? Because political momentum is quietly building again in Washington. There's renewed discussion about rescheduling marijuana at the federal level, and even rumors that certain states might push new legalization bills in 2026. Tilray isn't just sitting still. They've been expanding into the beverage and wellness markets, acquiring craft beer brands, and diversifying away from just cannabis. So, if the sector bounces, TLRY could lead that charge. Of course, it's volatile and speculative, but that's exactly what penny stock traders love. A little catalyst like federal reform chatter, and this could light up fast. Now, let's move to a sector that's been red hot again. Crypto mining. Bitfarms, ticker BITF, is a classic under $2 play that has become a favorite among penny stock traders who follow Bitcoin closely. The reason? We're approaching another Bitcoin halving in 2026, and historically, these events have kicked off new bull runs. Bitfarms is one of the few miners still maintaining strong hash power while keeping costs relatively low. If Bitcoin continues its current momentum and pushes past major resistance, miners like BITF could see exponential upside. But remember, the flip side is true too. If Bitcoin falls, these stocks get crushed even harder. The cool thing about Bitfarms is it gives small investors a way to ride the crypto wave without buying Bitcoin directly. Many traders use it as a leveraged bet on Bitcoin's direction, and at under $2, that's an attractive setup for high volatility traders looking for quick moves. Another interesting crypto-linked play is Canaan Inc., ticker CAN. Not many traders talk about this one, but it's actually a big player behind the scenes. They design and manufacture ASIC miners, the specialized hardware that powers Bitcoin mining rigs. Think of them as the chip makers of the crypto world. When demand for mining equipment spikes, Canaan benefits directly. The stock has been beaten down for months, sitting near penny levels, mainly because of the global crypto slowdown and concerns over China-based operations. But here's the opportunity. When the crypto market rebounds, companies like Canaan tend to move first. Traders start speculating on increased hardware orders, and Canadian dollar can rip before the rest of the sector catches up. Of course, the risk is high. Supply chain, regulation, and market sentiment can shift quickly. But for traders who want early exposure before the next cycle begins, Canaan is one of those speculative picks that often leads short-term rallies. Next up, let's talk about something completely different. Standard Lithium, ticker SLI. Now, this stock ties into one of the biggest long-term stories of the decade: electric vehicles and battery technology. Lithium demand has exploded as every car company from Tesla to Ford races to build EVs. But lithium prices actually crashed hard in 2024 after overproduction and slowing Chinese demand. Standard Lithium is one of the US-based companies trying to extract lithium in a more sustainable and efficient way, which could become extremely valuable if supply tightens again. Right now, with the stock under $2, traders are betting that it's oversold and waiting for lithium prices to rebound. It's also worth noting that the US government has been pushing for domestic lithium projects to reduce dependence on imports, and Standard Lithium could be a beneficiary of that. It's not a fast mover like crypto or cannabis, but it's a strong speculative play for traders who like undervalued EV supply chain stocks with potential catalysts ahead. Moving on, Open Door Technologies, ticker OPEN. Remember when this stock was trading over $20 during the housing boom? Fast forward to now, and it's sitting under $2. That kind of collapse gets penny stock traders' attention immediately. Open Door is a digital real estate platform that lets users buy and sell homes online, basically trying to disrupt the traditional real estate agent model. It was a pandemic darling, but when mortgage rates spiked and housing cooled, its entire business model got hit hard. The interesting part is, recently, housing data has shown some signs of stabilization. Rates have leveled off a bit, and homebuyers are slowly re-entering the market. Opendoor has been cutting costs, improving its algorithms, and even partnering with Zillow to expand reach. Traders see this as a beaten-down stock with brand recognition and huge rebound potential if the housing market strengthens again. It's risky, margins are thin, and the model is unproven long-term. But that's exactly why it's a classic under $2 penny stock setup. High risk, high potential reward. Now let's swing back into crypto for a moment, because our next play, Bit Digital, ticker BTBT, has been catching trader buzz lately. This is another crypto miner like Bitfarms, but what's interesting about Bit Digital is that it's often the one traders rotate into when Bitcoin volatility spikes. It has a strong hash rate and has been expanding capacity aggressively, while also diversifying into AI computing partnerships. Whenever Bitcoin breaks out, BTBT tends to lead the short-term momentum plays. You'll see it pop up on scanners with 20 to 30% daily moves, especially when crypto sentiment heats up. But it's not one to hold for months. This is a trader's stock. For short-term momentum players, BTBT offers those juicy setups that make penny stocks exciting. It's a roller coaster, but that's what traders live for. Now, before we wrap up, let's recap what we've covered so far. Tilray Brands, the cannabis comeback story that could light up again if federal reform moves forward. Bitfarms and Bit Digital, the crypto miners trading like leveraged Bitcoin plays. Canaan, the behind-the-scenes hardware maker that benefits when mining demand returns. Standard Lithium, a green energy play tied to EV growth. And Opendoor, the fallen real estate tech giant that could surprise everyone if housing recovers. All of these are under $2. All come with real risk, but also real stories and catalysts that traders can track. And that's what makes penny stocks so addictive. Every ticker has a story, a turning point, and a chance for a comeback. The real key here is managing the risk. Don't go all in on one stock. Instead, build a small basket of 3 or 4 plays, each with a different catalyst. Maybe one crypto miner, one EV stock, one real estate recovery story. That way, you're not betting everything on one trend, and you give yourself multiple chances for a breakout. Also, Always watch volume. Volume tells you where the action is. If a stock is moving with strong volume, traders are paying attention, and that's where opportunity lives. Now, here's my challenge for you. Out of all these under $2 plays, which one do you think has the most potential in the next 3 months? Is it the cannabis rebound, the lithium recovery, or the crypto miner run-up? Drop your favorite ticker in the comments because I'll pick one and do a full deep dive video on it next. And if you love tracking penny stocks that can explode overnight, make sure you're subscribed to Financial Codes. Hit that notification bell because next week I'm revealing 3 new stocks under $1 that are building crazy volume before earnings, and you won't want to miss that. Thanks for watching. Trade smart, and I'll see you in the next one, where we'll decode more of the financial chaos, one penny stock at a time.